Hello and welcome to IBTimes TV. I'm Leanna Brinder, Business Editor for the International Business Times. Joining me now is Ian Fraser. He's the author of Inside RBS Shredded. So hi, thanks for joining us.
Good to see you.
It would be great to get your take on what's been happening obviously with the mis-selling derivatives scandal, as well as the contents of what came out with the Tomlinson Report, because when that did come out, for all the people maybe like us that have been following those kind of updates, I suppose, over the last few years, it was a massive surprise to a lot of other people. However, about a week after that came out, the government, everyone's been distancing themselves from the Tomlinson Report, and of course we've had RBS getting Clifford Chance. They've been saying that they haven't found anything. I mean, what's your take on that whole...
I know that the Lawrence Tomlinson Report is entirely accurate, because I've been approached by over 100 companies to whom the sort of thing he describes has happened. It could involve mis-sale of interest rate swaps, crippling them financially, or it could involve other chicanery on the part of RBS, including sudden changes in valuations of commercial property assets, often by more than half within the space of a month. I've never heard it, it's extremely unlikely that any commercial property asset could suddenly collapse by more than 50% in 31 days, but according to RBS that can happen. So my overall take on it is that it's a rogue institution, certainly in that area. It is behaving possibly in a criminal, but certainly in a totally dishonorable way towards many of its SME borrowers. And that it's in denial. It's refusing to acknowledge this, and it's refusing to treat them fairly. It's refusing to even listen to people. Its knee-jerk reaction is to take them to court or to allow them to sue it, but then they're obviously hiding to nothing because it has such immense resources where legal fees are concerned. So it's just really an organisation which seems to be in absolute denial about how badly it is treating many of these SME customers who have done, as far as I'm aware, very little wrong, if anything.
You've been speaking to hundreds, possibly now thousands over the years of these SMEs ranging from all different scales and sizes. And with this denial from RBS, how are you seeing I suppose the last legs or dregs of these settlements, whether in court, out of court, or through the review, on whether it's mis-selling, consequential losses? Have you seen anything, I suppose, positive happening?
I think there's a few instances where settlements have occurred, but obviously once they're settled, the people normally also sign an NDA, so they're not allowed to talk. So there are vague intimations of an improvement there. But it's still, once it's in court, it plays dirty, it plays hard. I have evidence to prove that it basically makes stuff up and lies in court in order to basically destroy business people and their businesses, and that is just it's unacceptable behaviour for a state-owned bank. That sort of thing still happens, as far as I'm aware.
We've had failure in management over the years. We've had obviously the libel fixing scandal. We've had various other, whether it's mortgage-backed securities they've been sued for. We've also had the rights issue, Tomlinson Report, and then of course we're talking about the closing of branches, which is questionable in itself because on top of that they have all these IT issues. So should we let RBS fail? That's been the biggest question over the last few years, is should we let the 81% state-owned bank fail after so many years of problems, over a decade of problems?
Is the culture so toxic that you really need to treat it like radioactive waste and put it into a very deep hole and seal it with a very thick piece of concrete so that it's dead and then ceases to affect the rest of the real economy? Might be an extreme solution, but in fact you couldn't do that, because if you were to close down RBS, it would actually take at least 10 years of a liquidator and/or administrator working out where all the assets were, where all the liabilities were, and ensuring that creditors got at least something for their money. I don't think that is the best answer. Maybe breaking it up would be better. But what they really ought to have done, and I say this in my book, is that when they bailed it out in October 2008 through to November 2009, they actually made an error, and I think even Lord Turner acknowledges this now, as does Lord Miners. They should have 100% nationalised the bank so that they had absolute control. There were no minority shareholders, and they should then have basically broken it up, either just into a good bank, bad bank, which is a Swedish model, or potentially into several regional banks. So you could have RBS in Scotland, NatWest in England, Ulster Bank in Ireland. That were already 3 banks. You have Citizens in the US, and you'd have Direct Line as a separate insurance company. There's no real need for these banks to be part of a huge multinational global universal institution. It doesn't actually make any sense anymore. But unfortunately, they didn't do that.
Well, thank you very much. And that was Ian Fraser, the author of Shredded Inside RBS.